Susan and Ken, thank you very much for coming in today. As you know, we've been working together for a few months now and working on setting some financial goals and possible improvements to your family financial well-being. Now, you did mention that your primary goal and worry was whether or not your retirement planning was in place, whether your retirement savings was enough, and what steps were needed to be taken to be able to possibly improve the outcome. Now, before we do get started, I do feel that we need to take a look at your emergency savings account. Current savings shows that you only have roughly $12,300 in liquid cash that could be used if needed. Now, as a guideline, we do state that if there are two working spouses that make substantial income, that you would need roughly, as a guideline, 3 months of available income or available expenses. Now, when we look at your annual expenses and minus optional outflows. Now, when I'm talking about optional outflows, I'm specifically talking about things such as church donations, vacation funds, and other optional expenses. Now, when we subtract those optional expenses, your monthly outflow is roughly $5,888. Now, that would be roughly just a little bit over 2 months worth in cash savings for you right now. Now, with a rental property just barely breaking even and a possibility of losing other renters, I would recommend 4.5 months. This would also help with the uncertainty of what the income will be from the bar. Now, your current certificate of deposit is coming due at the end of this month, and I would recommend that we call the bank, set it up so that it does an automatic transfer from that account into the emergency savings account so that it'll increase it and get us most of the way to that 4.5 month goal. Now, as for retirement, you did state that your goals are that you are planning on working another 25 years with 80% of pre-retirement income needed with a life expectancy of another 25 years. Now, there are several things that do stand out with this. Now, with only of saving $60,000 so far, and both of you are planning to start drawing on your Social Security right away, and using these current assumptions and goals, we have a yearly shortfall of annual savings of roughly $25,000. Now, when you look at your statement of financial goals, you'll see that we only have about $6,000 of positive yearly cash flow. Now, there's only 3 things or factors that go into your investment balance or your investment return, or what you can expect to see after a length of time. The first one is how long do you have? The second one is how much are you investing yearly or putting into this? And thirdly is what is your expected rate of return? Now, we can't really change, now assuming your primary goals right now, we can't change the 25 years. Now, the expected rate of return is pretty much industry standard. Now, the amount that we're investing is limited. With that $6,000 of positive cash flow, it does not give us very much room to work. So what I would recommend is that we take a look at reducing the amount of pre-retirement income to roughly 70%, as well as having you both work until the age of 67. The reason for this is when you take your Social Security benefits early, in this case at age 62, if we were going with your 25 years, you also lose 30% of what your full retirement benefit should be. By working until age 67, you do not lose that 30%, which is a significant amount of money down the road when you look at it over a length of time. These 2 changes make the goal that much more attainable, and it would only require an increase of $4,000 yearly to reach this retirement savings goal. By using Susan's 403B company match, this would also mean less out of pocket from you to get that extra $4,000. By increasing Ken's IRA to the maximum amount of $5,500 for the year, we're looking at very roughly exactly what you need. We would also need to increase Susan's by a few extra $100. Now I know that this is only covering a portion of what we want to get accomplished, but this is definitely something that I feel is very important and a very good first step to take. Now I would like to listen, see what expectations you have, what concerns, questions, and we will then take a look at it again and go from there.